Hello and welcome to this December 30th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Research in Motion, ticker symbol RIMM. This is a little bit more than a $30 billion market cap company. Technically, you can see the stock was in a downtrend as we went through the summer months, but we did bottom at the end of August, and then we began this uptrend. Notice the MACD turned up, went up through the center line, came back down briefly, and you can see the MACD actually can't quite see it, but it basically held the center line and then started up again. And on this push to the upside, several things happened. Number one, you can see the 20-day moving average crossed up above the 50-day moving average, and both of them turned higher, showing some increasing momentum to the upside. Notice also the strong volume that came in on this move to the upside as well. So appears to me that research in motion was being accumulated. The accumulation started really back in mid-September, coming off this bottom. You can see a few very heavy volume days to the upside, and that has been a pattern that's continued really over the last 3 or 4 months. Each one of these pushes to the upside have come with some pretty decent volume. Now, the selling that we saw back in June and then again throughout August, you can see some pretty strong volume on this move to the downside, showing a lot of distribution. But the selling that we have seen over these last 3 or 4 months, for the most part, has been very light, and especially over the last week or two, as we've been falling back to approach the 50-day moving average. You can see volume's been very light on this move. Now, there are a couple things that we really try to stress at InvestEd Central. First of all, we can't guarantee a positive outcome on a trade. No one can, and don't think that they can. No one can guarantee a positive outcome on a trade. However, we do believe that we can increase our odds in terms of our chance for success in a trade. Now, if you take a look at Research in Motion, I think this will demonstrate what patience and discipline can do for you in trading. Stock was trading at about 63.50 as we went into early December, but notice the MACD did not break to a new high. So even though prices were moving up, the MACD was flattening. That's a sign of slowing momentum. So you always have to be careful there. Early in December, we were trying to make new breakouts, and if you notice down here, the volume had completely disappeared as well. So we have a false breakout, we've got a flattening divergence, we've got lack of volume. All of that would suggest that Research in Motion was running out of steam in the near term and needed a little bit more of a pullback than just a 20-day test like we saw in November. And as a result, we have seen Research in Motion fall back and just recently test its 50-day moving average. So the slowing momentum was a problem. That has now been corrected. The moving average convergence divergence, because it was weakening, I don't know that I would say that this is a negative, maybe a slightly negative divergence here, but with the MACD centerline test, effectively we have a reset. So now the 12-day and 26-day moving averages have come right back together and are almost identical at this point, with a very, very small difference between the two. That's what the MACD represents, the difference between your 12-day and your 26-day exponential moving averages. So that momentum, the building of, or that distance, the divergence between the 12-day and the 26-day moving average has now been eliminated, and we're back to the zero line. That, in my mind, is a reset. Also, getting this 50-day test, we haven't had a 50-day test, or we haven't been around the 50-day since back in mid-October. So this is an area when normally we would see some buyers step in. And then take a look at the RSI. In an uptrend, historically, the 40 to 50 area becomes a buy point generally during an uptrend. And you can see the RSI sitting back at 45 right now. This is an area where you want to think about getting involved. And then finally, take a look at stochastics. Stochastics now down at 13 and change. We had not seen stochastics at this level since back in late August into early September. So I think Research in Motion is starting to look better from a reward to risk standpoint. Our target would be up close to the 63.50 area. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.